Let's talk about making money in the stock market. Today, I'm answering questions from you, the community member. We'll talk about the best stocks to buy now, the next phases of AI, secular growth trends we haven't talked about before. When should you sell a stock? Should you ever short a stock? Is a recession like 2008 coming, and how should you prepare your portfolio? I'm excited to dig into this one, guys. Let's go. In the community tab on YouTube. If you don't use the community tab, make sure you use it. I'm posting on there all the time. I said, please drop me a question below. I'll pick the best questions and answer them on an upcoming video, and that video is right now. The first question's from Ferris. What are your thoughts on the solar theme? How do you think it'll do in the future, and which companies are poised to benefit the most? This is a topic that just came up yesterday in our Discord community, and I encourage you to join us. But I want to share the conversation with you. So just yesterday, I was talking with Steve R. in the community. He said he really wants to invest in solar. I do believe in its future, but every piece of news is bad. And then I asked Steve, hey, I'm curious, why do you think it's the future? He believes that it has a future, not necessarily the future. There's obviously a worldwide push for clean, renewable energy. Advancements in its technology are coming fast. The cost of panels has and will continue to decrease, making it more realistic option for both commercial and residential applications. Now, I do agree with that, but what's the problem? If the costs continue to decrease, does solar simply become a commodity? If existing solar companies shrink profit margins, what happens to these stocks? Even if there's growth in revenue and those profit margins shrink, what will happen? And I shared these thoughts with the community, talking about commoditization of solar, impact on profit margins. So intense competition, lower prices will squeeze margins for manufacturers and installers. Of course, interest rates have to come down for solar to really have any impact or benefit, because that's the main selling point, especially for residential. If I tell you, hey, you can save $200 a month by going to solar on your electric bill, but then all of a sudden rates go up and now you're only saving $20 a month, you're going to wait until those interest rates come down. So solar has and will continue to be interest rate sensitive. Now, why did solar stocks sell off so hard yesterday? That's because of a Senate proposal to phase out tax credits by 2028. And you saw these names get absolutely hammered yesterday. Enphase was down almost 24%. First Solar almost 18%. Now, I've been investing for almost 30 years. And one thing I can tell you is true: every single time you have margin compression, you're going to have pressure on the stock price. So shrinking margins is going to lower valuations even with that revenue growth. Stocks may stagnate or even drop if profitability lags, margins lag. So in short, if solar becomes a commodity, revenue growth won't save stocks if margins shrink too much. Now, certain firms that maybe differentiate themselves, they could be leaders and outperform. But this is the dilemma I have with solar investments. And when someone cracks the code, please share. Now, if you decide that solar is part of your blueprint and you want to invest, there are a bunch of different stocks that you can choose from. Also ETFs. But Enphase Energy is one that we've talked about. It's one I've owned in the past. I currently don't own any shares. First Solar, Solar Edge Technologies, Sunrun. Do some research on these stocks. I'd love to hear your comments. I'd love to hear your research. Share it in Discord. If you're not in our Discord community, drop a comment in this video below and let us know, which solar investments do you think are buys right now? If you want my opinion, the best way to play this would be with Tesla stock. Tesla is going to be a clean energy conglomerate. It's going to give you electronic vehicles. It's going to give you solar. It's going to give you battery storage. It's going to give you moonshots like Optimus and robo-taxis. Tesla is the way to play this. I look at Tesla as a clean energy ETF, and it's really something that fits in most portfolios. Now, I don't know if I'd go buy it at today's prices. We were buying that stock last year in 2024 at lower prices, but definitely consider Tesla as a way to get exposure to solar. The next question's a good one. I'd like to hear more about the next two phases of AI and where the best potential investments are and timeline. Of course, this is going to be somewhat speculative, but I'll share my take. Of course, what you see here on your screen is what we've been talking about in Fired Up Wealth for years. And this is the AI data center value chain. Now, we talked about phase one infrastructure and really phase two of Gen AI, where you're taking those LLMs that are built from phase one and connecting those to proprietary data, to company data. So that phase two for us is going to be like a Snowflake, a Palantir, MongoDB, Elastic, and more. But as you can see here, there are a lot of companies that benefit specifically from AI data centers. So everything from power transmission transmission and generation, the processors, networking. And you can, of course, get really granular and look at things like Caterpillar and say, oh, you need machinery to build these data centers. But we have really focused on the hardware components and the networking primarily, as well as a couple of those energy plays. Now, from that first phase, that infrastructure phase, which we're really still in, we're still building those data centers. The CapEx is still being spent. In fact, Marvell Technology just shared this yesterday, talking about 51% compound annual growth rate or CAGR from calendar year 2023 to 2025. Now, from 2025 to 2028, they're showing a 20% CAGR and over $1 trillion. This is CapEx spent. But that artificial intelligence value chain is going to include those AI applications and consumers, so ChatGPT and Tesla and Meta. You also have the data infrastructure that we've already talked about, Snowflake. Databricks would be in there too. Of course, that's a private company. So what you're starting to see now is benefit on the AI applications. Of course, the hardware is still benefiting as we build more data centers and spend more CapEx, but you're starting to see benefits in these SaaS companies, these software service companies like Salesforce, ServiceNow, and of course, cybersecurity names like the CrowdStrikes, the Zscalers, the Cloudflares. So in Fired Up Wealth, we've been focused on owning many of the names that you see on your screen. Of course, the cloud service providers, and that's going to include Amazon, Microsoft, Google, as well as Oracle. Now you can see those infographics are from Spear Invest. And I interviewed Ivana. She's the CIO and founder of Spear Invest. I interviewed her on this channel. You can go check that video out after this one. But I think the next phase of AI is going to be artificial general intelligence, or AGI. And that'll probably start happening in the next couple of years, 2027 to 2030, 2035. So you'll want to still own companies like Amazon, like Google, like Microsoft, Nvidia, AMD, Taiwan Semiconductor, the usual suspects on this channel. The projection is a 59% compound annual growth rate through 2028. That's for AI software platforms. So enterprise adoption is growing. The next phase after that, probably 2032, 2035 to 2040, that decade is going to be artificial superintelligence. Now, this is getting more speculative. It's also known as ASI. Now we're talking about next generation chips, quantum computing, fusion energy. The computational needs for this is going to dwarf AGI. So AGI is really about human intelligence. This is about surpassing human intelligence, solving very complex global problems like climate change. This is when you get into really advanced robotics and autonomous research. So you're going to want to be part of companies that are going to be building next generation chips, quantum computing, fusion energy, nuclear power. But the big question is always, what happens to cybersecurity when quantum computing becomes a thing? But I think space exploration stocks, and that's a question that's going to come later about space exploration. I think that this is part of this. This is part of that artificial superintelligence. So this is very early stage, speculative, very long-term horizon, 2035, 2040. All right, let's do a couple rapid fire questions here. North Dakota Ryan, what's a new secular trend we should keep an eye on that we haven't covered much? We can speculate about what secular growth trends will be big in the future. Right now, we know what secular growth trends exist. So the question is, what secular trends should we keep an eye on? We're already keeping an eye on the existing secular trends. The question is, what are the next secular trends? One area to look at, air taxis is an example. Archer Aviation, we just covered this on Chart Day. Very speculative. No revenue right now, but could be huge someday. Just from the top of my head, outside of that, another area is going to be genomics. We've talked about genomics, but I think there are going to be future use cases for genomics that we haven't really talked about because they don't exist yet. I was curious and I asked Grok about genomics and the future of genomics. Now, we know about, for example, gene editing and therapies, CRISPR, next-gen editing tools, right? But you start looking at other areas like synthetic biology, forensic and security applications, evolutionary and ecological insights, consumer genomics and wellness, lots of different things here. I think when you look at AI and cracking the code, the golden age of AI and medicine are going to combine those two things together. And I just think you'll see some very powerful use cases. Another great question. What are your thoughts about the space sector? Also, where do you see the industry in the next decade? If you want a deep dive breakdown on space, of course, you already know this, Ethan, but go into Patreon and watch that space exploration video with Derek. Of course, that was back in 2023, and that's when we started talking about Rocket Lab as a community. Now, we've made a lot of money on that stock, and I think there are a lot of other opportunities you can make money over the next decade. When you look at the different areas of space, of course, one of those areas is going to be space tourism, which we haven't been big fans of really at Fired Up Wealth. health. I do think with commercial spaceflight and hypersonics, there could be some opportunity down the road. Of course, you also have lunar and Mars exploration in the mix. The big area as of right now, of course, is going to be satellite and connectivity. So Starlink is already huge, but it's going to have a mega constellation. Some projections are 40,000 and 50,000 satellites. Of course, other companies like Amazon with Kuiper are coming into the mix. And I think this will be big for a lot of the stocks we own. E-commerce, for example, Amazon's and the Shopify's, but also more people on the internet means more traffic, more cybersecurity. A lot of the different stocks and secular themes that we invest in are going to benefit from satellite connectivity. There are other more speculative areas like space mining, economies, colonizing Mars, technological advancements. Of course, you're seeing reusable launch systems already with SpaceX and Rocket Lab, geopolitical and military dynamics. Space is going to be a contested domain. US, China, Russia, expanding space forces. So you're talking about anti-satellite weapons, cyber threats, space assets. There's just a lot that can go into this. Of course, most stocks that you invest in this sector are going to be highly speculative, 5x, 10x, or 0 type stocks. When do you decide to convert to house shares? Is there a timeline you work with or a percentage game? Example, 100% you sell half and the rest is house shares. Cheers, Eric. Thanks for the content over these past 5 years. Thanks for the question. So I actually have a masterclass video on when to sell stocks. And we did offer that masterclass video for free on YouTube. So I'll put that in the video description. You can go check that video out and it breaks down. It's a 40-minute video answering this question. So a very detailed answer to your question. What I will say quickly though, is if you're a younger investor, don't always be too focused on trimming. For example, in our Discord community, we have a trade floor, investing trade floor where members share their buys and sells. And you'll see someone that's maybe 45, 50 years old trimming a stock, they're up 500%. And then a young investor goes and trims it and they're 25 years old. And you think, hey, hold on, just because I'm trimming it or one of our seasoned members are trimming a stock, it doesn't mean that you should go ahead and trim it yourself. And so it's really going to come down to a few different things. Your blueprint allocation, if the stock is parabolic, if it's frothy, there are a lot of things that go into that. Check out that video. I think it'll help you a lot. If you could choose to hold 2 from each category for the next decade, what stocks would they be? With, of course, some of your reasons. You might not like the answer I'm going to give you to this question. So category 1, he's got CrowdStrike, Fortinet, Zscaler, and Palo Alto Networks. Category 2, AMD, Broadcom, Nvidia, Taiwan Semiconductor. Bonus, you want my thoughts on these other stocks as well. Of course, the ones on the bonus there, Applied Materials, Lam Research, KLA, ASML, these are going to be semiconductor equipment manufacturers, right? So when you build your blueprint, decide which components of semiconductors you want to own in that blueprint. Now, the question is, if you could choose to hold 2 from each category for the next decade, what would they be? The answer is none. And the reason is I don't buy and hold the expectation of buying, holding forever, or I'm going to buy and hold this for a decade. I generally go into it with the idea I'm going to hold it for 5 years. But if the story changes, well, then I don't have to hold it anymore. And so when I'm a long-term investor and I'm buying, I want to own it for many years, like 5 years or 10 years, but I'm buying, I'm holding, and I'm monitoring. Now, I did a video recently on Patreon. This is going to cover the top stocks, high conviction stocks. So stocks that I feel comfortable owning the next 10 years. And a lot of these growth names that are really expensive, you're not going to see those on the list. And I go through some of the reasons. Now, there is one stock on this list, Broadcom, that I'd probably feel comfortable with the intent of holding it for 10 years. These other ones, well, I don't know. I've owned Nvidia since $3.95. Do I plan on holding it for 10 years? Maybe, but I'll probably trim it back pretty heavily, right? So the question is about 10 years. And what I want to make sure you understand with my answer is I don't want you to go in with the mindset that every stock you buy is just going to be 10 years. I like all the stocks mentioned. Of course, CrowdStrike is going to be my favorite when you think of endpoint security. It has been for years. I've been long since 2019, the IPO. I don't own Fortinet and I don't own Palo Alto. I own some Zscaler. Wouldn't be super high conviction like CrowdStrike, but in that tier 1 category. And then category 2, AMD, Broadcom, Nvidia, Taiwan Semiconductor. I think there's a good chance Taiwan Semiconductor is probably around in 10 years. But again, it's buy, hold, monitor. So if I were looking at this and you're saying 2 from each category, CrowdStrike, Zscaler, probably Taiwan Semiconductor, and it's a crapshoot really with Broadcom, Nvidia, and AMD. Of course, Nvidia is a stock I'd want to own right now. What does that look like in 10 years? It's hard to say. In terms of the semiconductor equipment manufacturers, my favorite on the list is Lam Research. The best performer is probably KLA. Are you considering buying Rubrik? What are your thoughts as a long-term growth data security play? This was covered on a video. Make sure you go watch that video. I provide my thoughts. I do like this company. It's a little bit expensive right now. It's on my watch list. Steve has a question in relation to the size of a stock and percentage in a portfolio. This is coming from someone who DCAs a couple $100 a month. How do you determine the size of stock will be in your portfolio if the value is always growing? Do you plan for it to be 10%? I had planned my portfolio to. This is why a blueprint is very important. If you have not watched the masterclass videos, there are 21 masterclass videos and 7 breakout sessions with another masterclass coming here in the next couple of weeks. You're talking about 28 videos, 20 plus hours of content teaching you everything I know, investing A to Z, and it's going to answer this question. But what you need to do is build a blueprint and decide how much you want to own for each stock or ETF before you even buy anything. Now, here you talk about 10%, and generally I don't like anything over 5%. So I think a lot could be learned from those masterclass videos. Definitely go check those out. If you're dollar cost averaging though, and you're just buying a couple $100 every paycheck, I would focus a lot on ETFs on a core. And if you're buying individual stocks, make sure you have a blueprint. Generally, we like 5% max for a stock. Now, you're going to have lots of people that say that's wrong. You have to have these high concentrations, or you're never going to get rich. You can do whatever you want with your money, but understand that I've never had a high concentration. Someone told me the other day at X, all the wealthy people I know, they went all in on something in one big. Well, I consider myself doing pretty well. I've got over $3 million, $3.1 million just in the taxable, not including other assets, not including our businesses. I don't know if you want to call me wealthy or not, but I'm doing okay. And I've never gone all in. And of course you could say, well, you bought Nvidia at $3.95. If you would have bet the farm on it, then you'd have a lot more money. Well, sure, but you could have bet the farm on a bunch of other stocks and it wouldn't have panned out as well. So for me, it's 5%. At the end of the day, you got to do what's best for you. In the masterclass videos, we talk about something called modern portfolio theory. And it's really important to understand MPT, and it can be very helpful. There really is no wrong answer for the number of stocks that you own. This question, I'm not 100% sure what Amanda's asking, but transition between sectors, when to know, how to know if you're in distribution or accumulation. I'm wondering if you mean accumulation versus preservation, right? So you're accumulating. When you get to your number, that's when you want to start thinking about preservation. If your goal is $3 million and you got 2.5 million or 2 million, you're starting to already plan ahead of time, years in advance, getting to that preservation phase, right? So accumulation when you're young, preservation when you're old. Go from growth stocks, selling those growth stocks, going to passive income. How should you get out of a stock? This is another one. Watch that video in the description below, when to sell stocks. That'll answer your question. Would you quit drinking for a year for 1,000 Nvidia shares pre-run up? Absolutely. I would do that in a heartbeat. Schmidt, this is a good question. It's one that I could probably spend an hour on. You're asking about the future secular trends within semiconductors that could cause disruption in the AI trend, specific types of technologies, edge inference. This is a Pandora's box, but this is what I'm trying to crack, the code I'm trying to crack every single day in our Discord community. So for example, you think of edge and inference, AMD, Qualcomm. You think of Qualcomm with Snapdragon chips and how that's going to help with the edge, with Internet of Things. Trainium chips, of course, Amazon's building chips so they don't have to buy from Nvidia. And AMD is doing this. And this is an ongoing thing. It changes, it evolves every single day. So this question, if you want to answer this question, you have to be in our Discord community and constantly be looking at our Discord community, the different posts within Discord, listening to our live streams. This is the code that we're trying to crack every single day. So far, we've done a great job, and you've seen the performance in the portfolios. This question is about CoreWeave, 390%. What am I missing? The reality is this is kind of a meme stock. It's become a trader stock. It's getting pumped. The fundamentals aren't really there. And we could spend a lot of time on this one too, but you're asking, what have you missed? Nothing. It's just one of those retail meme type stocks that got on trader boards. People are pumping it up. It probably won't end well, and I'd be careful with it. If you made money on it, great. But the business model, I don't know if it's sustainable longer term. Mr. Snazzy wants to know how to go about changing up your portfolio if you decide to change your strategy. I would recommend not changing your strategy. This is where you get in a lot of trouble. So this person's talking about he was mostly filled up with safe dividend stocks, wants to switch to growth. This is what we call the dog chasing the tail. Growth stocks are on fire. You want to FOMO into growth stocks because dividend stocks aren't doing anything. As soon as you do that, growth stocks sell off. Dividend stocks go up. This is why the Fired Up Wealth Blueprint methodology works. What we teach in the masterclass, because you have a diversified portfolio that has ETFs, that has dividend stocks, DGIF, has growth stocks, different type of growth stocks, and you get the best of both worlds, of really all worlds, to navigate as a long-term investor to grow your wealth over time. Be careful of changing your strategy and being the dog that chases its tail. Stuart wants to know about these air taxis, Archer Aviation. We covered it briefly earlier. They're highly speculative. A company like this has no revenue. You could make a 10x, it could go bankrupt, you can go to zero. Be very careful. They're very much in the meme speculative type category. Burning cash could be huge, but just manage the risk and expectations appropriately. Generally in spec, you want something like 10% of your portfolio with 10 to 20 stocks. Don't go all in on one name like Archer. Some investors are saying that the market's overvalued and an upcoming recession similar to 2008 is coming. What would you do if that happened, and how are you positioned? Well, if you're a long-term investor and you've got a 10, 15, 20-year horizon, you really can't worry about stuff like this because a recession's always around the corner. It's just a matter of when. Now, if you're getting close to retirement age, that's where you should really start thinking about going from that accumulation to preservation phase. You want to have some more cash, you want to have bonds or different things you could do. You can hedge. If you're young and you're trying to invest in growth for the long term, if you follow that blueprint methodology, you're trimming when things are parabolic, you're saving some cash to take advantage of opportunities, you'll be fine. 2022, we just lived through it. We started a new portfolio at zero. It's pushing $250,000 in about 3 years in that portfolio. So just be really careful of trying to time the market, trying to outthink the market. This is where people get in trouble, especially retail investors. This person already asked the question, but is asking another one. What is the best? And I appreciate the questions, I really do. What's the best number of different individual holdings before your portfolio becomes too much like an index? This is a common misconception by young investors that if you have more than like 10 stocks that you can't outperform. And I've proven that time and time again that that's not true. Peter Lynch, he'd have 1,000, 2,000 stocks in the Magellan Fund, outperform the S&P 500 by 100%. So modern portfolio theory is what you want to study. People will bring up the Berkshire Hathaway thing. Berkshire, the Apple is a major part of it. It's 30% of the portfolio. Now, if you take the entire conglomerate of Berkshire, Apple is about 8.5%. Right. And that's the largest concentration. Fired Up Wealth, we try to keep things around 5%, but right now, Nvidia is 13%. So I'm overweight. I'm kind of breaking my own rules. But this whole thing, especially you see this on social media, that you have to have like 5 or 10 stocks you can outperform. Most of the time, what happens is people that are trying to do this actually underperform because they pick 3 or 4 spec stocks that tank and basically bring the performance down. What will happen is these portfolios will do really well during a bull market and they'll crush it for a year or two, like in 2021. Then those stocks will lose 80, 90% of their value and never recover. And the person ends up selling at a loss, buy high, sell low, takes his ball and goes home. So there really isn't a right answer or a wrong answer. There is a video on the channel that covers what's the best number of stocks to own. Generally speaking, that's 25 or 30 for the average retail investor. Plus you want some ETFs as a core. And the reason for 25 or 30 is not because that's a magic number. It's because that's usually the number that most retail investors can manage. If you can manage more, there isn't really a wrong answer. I've got 60 positions and I'm crushing the market, crushing the NASDAQ. So it completely depends on you, right? Your blueprint and what you're trying to accomplish. What is the best stock to short to protect the portfolio? The answer is never short a stock. I've accumulated millions of dollars investing in the stock market. I've never shorted a stock once. Just don't do it. If videos like this are helpful and you're new here, make sure you subscribe to the channel and click that bell for notifications. And do me a favor, drop me a like and drop me a comment. Let me know what you think about these topics. Thanks for watching. Have a great rest of your day. Take care.